Thanks for clicking. The Bank of Canada is going to be raising interest rates further, but we're getting close to the end of the rate hiking cycle. This was the message coming out of an interview conducted with the Bank of Canada Governor Tiff Macklem by the CBC. The interview comes almost 1 year to the day after Governor Macklem was interviewed by Evan Solomon last year, where the Bank of Canada Governor retracted the word transitory and gave some predictions for the Bank of Canada inflation and interest rates for 2022.
In hindsight, was utter nonsense.
But the interview comes as a number of predictions are being made about Canada and the market and interest rates for 2023, with RBC predicting the worst might be over for Toronto's real estate correction, the stock market's overjoyed at a 7.8% US inflation rate and the potential for a Fed pivot, and the central bank's warning of a recession. Stock markets rallying at 7.7% inflation and warning of a recession. Strange times. But how seriously should we take the predictions coming from the Bank of Canada? Is 2022 Governor Macklem different than the one we saw in 2021?
This time I'm sober.
So what I want to do today is compare last year's Governor Macklem with this year's, looking at the predictions that were being made on inflation and interest rates, look at where the governor expects the economy to go in the next year, go over specifically what wasn't said in the interview, and then discuss what to look for next. We have a big week ahead of us with the CREA, the Canadian Real Estate Association, set to release Canada's national real estate data any day now, and we're also expecting Canada's inflation rate at the end of the week. We'll obviously have updates out on both on this channel. Click like and subscribe if you want to get those updates. But for now, let's get into these interviews. First up, inflation. When Governor Macklem was asked about Canada's inflation rate last year, he was probably a little bit more optimistic than he should have been.
And we do have inflation. It's running 4.5% now. We think it's going to go up to close to 5%. And then over the course of next year, we think as we get to around the end of next year, it's going to be around 2%.
Fast forward, and Canada's inflation rate peaked at 8.1% in June and now sits at 6.9%.
We're going to know.
Governor Macklem was a bit more cautious this year, choosing not to give a prediction on inflation, but rather to say that the bank is looking at core inflation rather than headline inflation. It wants to see core inflation coming down.
Look at the last couple CPIs. I would say the good news is that underlying inflation, or what we call core inflation, it stopped going up, but it hasn't really rolled over. It hasn't really started coming down. So that's one thing we're going to be looking for. Is it going to stay where it is? Is it going to start to come down?
And I think that's a good point to look for in the future. As we talked about before on this channel, core inflation does not include food and gas. And with gas prices rising and then dropping, which will obviously show up in our headline inflation rate, the bank is going to be paying much more closer attention to our core inflation, which slowed down but remained unchanged over the past few months. But even with our core inflation rate remaining unchanged, Governor Macklem says we are going to be needing more interest rate hikes in the future.
With inflation at 7%, with an economy that's still in excess demand, we do think that there is a need for further increases.
But last year, Evan Solomon asked the governor point blank, should Canadians consider locking in? Are interest rates going to go so high that they should lock in now?
Should people ask me every day, and if you're asking me, you're in desperate trouble, should we lock in?
Think very carefully, son.
The governor responded somewhat vaguely.
The time when we're going to likely be considering raising interest rates is probably going to be sooner than we thought. Last week we said it's going to be sometime around the middle of next year. And if you want it in months, sometime between April and September.
When pressed for how high rates would actually go in 2022, the governor remained vague, but still insisted that rates would be relatively low.
We're talking about, moving up to still pretty low rates, but off these ultra low rates.
Fast forward 1 year, and the governor remains vague on how high interest rates will go, but says that the bank might be nearing the end of its tightening cycle, might soon pause on interest rates.
We are getting closer to the end of this tightening cycle.
So the governor still isn't giving any indication on how high rates will have to go, but instead says that Canadians should be watching the core inflation rate. Governor Macklem then turns to Canada's economic outlook for 2023, which he says Canadians should expect will be around zero.
What we've put out in our forecast a couple weeks ago is we actually think growth is going to be close to zero for the next few quarters, till about the middle of next year, and then we think it's going to pick up.
So the Bank of Canada is very much forecasting a recession in 2023, a recession which, as we've talked about so many times on this channel, the bank very much wants to cause in order to get the inflation rate back down to 2%. But what was said is almost as important as what wasn't said. Governor Macklem was asked what would be the harm in the Bank of Canada pausing on interest rate hikes and just waiting, say, 3 or 6 months to see what happens, to see if inflation rate comes down with the interest rate hikes that we've already seen.
Is there not an argument to say maybe we hit the pause button now and see where we're at in 3 or 6 months rather than continue down this path? Like, why the urgency now if it does take that long and there are so many unknowns?
For his part, Governor Macklem very much did not answer the question beyond saying that we're probably getting close to the end.
I can't tell you exactly what that is. I can tell you what we're following and what will help us make that decision. But we're not there yet, but we are getting closer.
As to why the governor didn't answer the question, my guess is that he very much knows that if the bank goes too far too fast and severely hurts the economy, they have a tool for that, QE, which we saw in 2021. And 2020. However, if they don't raise rates, and they should have, as we're seeing right now, then they risk having to go much higher, much longer on interest rate hikes, which will cause even more long-term pain to the economy. So, unlike last year, the Bank of Canada isn't giving any concrete predictions. They're going to be watching core inflation and expect interest rates to rise, though they aren't giving any specifics beyond that we might be near the end soon. Might. And I wanted to do a comparison of this year's interview with last year's, not just to show how wrong the bank was.
It's always been partly about that.
But rather to show that despite all of the predictions that we're seeing this year about pivots, about the banks reversing, about real estate returning back to its glory days, nobody knows. If the central bank didn't know last year, then the experts this year certainly don't know either. But the predictions from these experts matter. CTV News ran a story on Sunday looking at multiple couples who purchased a little over a year ago, took variable rate mortgages on the advice of their advisors, and are now being forced to eat through their savings as the rates have gone so high. Given that central banks, those who actually set the policy, don't know how high interest rates or inflation will be going over the next year, over the next 2 years, given that their predictions have been wrong so many times, the number one factor to consider when choosing variable or fixed is affordability. Granted, interest rates will probably come down in the next 2 or 3 years, and I stress probably. But as the comparison of last year's interview with this interview shows, we don't know when that will be. We don't know how high inflation will go, and we don't know how high interest rates will go. So, interest rates probably will come down eventually, but if you are in a variable rate mortgage, make sure that affordability is there, that you can withstand interest rates going up 1, 2, 3% higher. 3% higher seems crazy right now, but 3.5% higher seemed crazy last year. With that said, we'll continue to track the Bank of Canada's path of interest rate hikes on this channel. Click like and subscribe if you want to get those updates, but for now, thanks so much for watching.